Welcome back here with Money, and we're discussing home loans this week on this show. So, Gaurav, one of the very important aspects is, of course, taxation. The general sort of theory that floats in the air is that, of course, you must take a home loan even if you can afford the house because it's very tax efficient. Do you agree?
No.
You don't?
Yeah.
Why is that?
I'm very, very clear. Assume that there is a loan of about 20 lakhs that you have, 10% interest. So 2 lakhs is the interest that you're paying. Now, if you really have to take a loan, go ahead and do it. That 2 lakhs will be reduced from your income, and whatever is the amount, you will pay tax. So you have paid that 2 lakhs as an interest, no taxation. But say if you don't need that, I mean, you're just taking it for tax benefit, then you would not have any interest outgo, which means you would have not paid 2 lakhs as an interest, but you would have paid tax on that. And if you're in 30% bracket, 2 lakhs, 30% is 60,000 rupees. So you end up paying 60,000 tax because you have not taken a loan. Now, from a taxation perspective, everybody is happy. Hey, I saved 60,000 rupees. But from a planner's perspective, who looks at cash flow, I would say instead of paying 2 lakh interest, pay 60,000 cash, because net cash flow in your hand after that is much more. So purely as a financial planner, we would always encourage people that don't take a loan only for tax benefit. Take it if you need it, and also get out of it as soon as possible, because we've also seen enough instances where people were dragging it, and then some turbulence in economy, some turbulence in job, and I mean the house that you're living in, where your family is living in, get it debt free as soon as possible.
Okay, that's a prudential planning perspective. A very interesting number calculation there, of course. I finally see that when you're still paying as a cash flow outflow, it's a 2 lakh rupee outflow. Now, of course, the incentive that you get of this 2 lakh rupees on the interest that you're paying, of course, 1.5 lakhs, which is part of ATC, which is on the interest that you're paying.
So that's principal. That's
principal, and this, of course, is the interest payout. Now, all of this is applicable to a self-occupied property, correct?
Where you're living.
Where you're living. You've bought a house.
Or anyone you said this is a self-occupied property, you'll get it.
Yeah, so you have applied for the loan, you've bought the house to reside in it. What happens when in the case of a second loan, then a second home, and therefore a second home loan, then how does taxation?
You're given on lease?
And yeah, in both cases.
Also,
when your house is occupied, as in given out on rent, and when it isn't. So explain both to us.
So when it comes to rental, I'm getting a rental income. So there is an income happening, and to incur that income, I had to buy a property, and to acquire that property, I had to pay interest. So it's like a business kind of balance sheet, where you're saying that I had to purchase plant and machinery on a loan to kind of generate that income.
Yeah.
To that extent, whatever interest I've paid would be reduced from the rental income, and then whatever is the residual, I pay tax. So to that extent, you're getting complete tax benefit. Now again, it's a tax benefit, and it's not like you should do it or you should not do it. But rental is complete different connotation, because then the rental yields are so poor. So, you know, when you're looking at generating an income out of it, look at it from a different perspective rather than just a tax.
But this is interesting. If you are going for a second home, it is better to at least have it on rent, not only from the whatever little rental income you're getting, also from a tax efficiency point of view. In terms of servicing
if
that
these are the only parameters, yes. But again, we look at more comprehensive and the hassles and all, but we keep that aside of discussion. It's not needed.
What happens if you take a second home, you're not staying in it, and it's also not on rent?
I don't think then there is tax benefit, but there it's very, very clear. It's a first house that you are going to be, any one house that you have, you get tax benefit. You can't have it on, like, I have 5 houses
and everywhere I want.
Yeah, so principal is 1.5 lakh, but everywhere 2 lakh. No,
it doesn't.
I don't know. Correct me, Rakesh.
No.
So, what are your thoughts, Rakesh, on taxation? That's a planner's point of view, but you know, tax is a very important aspect of taking that home loan.
Yeah, it is. But look at it this way: majority of the home loan buyers, or home buyers or home loan borrowers, are the first time. They are buying it for the first house, majority in this country. And I think at that point in time, the interest benefit which he gets on his principal and interest is very important and critical.
But
Also,
that, as Gaurav argues, only if you don't have the requisite money upfront to buy that house.
If
Then it
you
makes
don't,
sense.
then please go ahead
so
and
no,
take it.
I was just adding, then you have a rental income which you are saving. You are not paying your rents. Also, what you're doing is you're creating an asset for yourself.
Undoubtedly, undoubtedly,
You are creating an asset. So if you look at the interest benefit, principal, interest, rental saving, and you're creating an asset for you and your family.
Absolutely.
So I think if you are the first time buyer, you have taken the first time loan, go for it.
Well, okay, on that note, we'll wind up the conversation. Gentlemen, thank you so much. I am definitely a little more clear about, buying that house and getting that home loan. We hope it's been helpful for our viewers as well. Thank you for watching Money, Money, Money this week. Keep sending us your feedback on the email ID that's on your screen. We'll see you again next week.